Everyone, welcome to the Red Lentil panel. We have with us a very interesting group of people, all corners of the globe represented on our panel. You know, just to frame the discussion, if we look at the red lentil markets and the past 24 months in the red lentil industry, it's been a very tough go for a number of companies in a number of regions. It's been a commodity group that has lagged in terms of price. We haven't seen the appreciation that we've seen in some of the other sectors. So, you know, certainly when we look at the consumption markets around the world, there's been an overall view that the red lentil markets being very dull has actually caused a number of losses and a number of, difficult economic conditions for our industry. And so when we look, forward, I think what we want to do is start off by getting a little bit of a perspective on around the world on where we are sitting today as a baseline. We've now, managed, if we look at the Canadian side, to burn through, the crop problem of 2010. So I think we should all in our industry recognize that, when we talk about crop failures and crop problems, usually we're talking about drought conditions. But if we look at the 2010 situation in Canada, we ended in a position where it really couldn't have been any worse, where you had, record crop size, and then really with 1 year's annual rainfall and 21 days at harvest, we ruined the quality of the crop, achieving a total inverse of the normal quality parameter. So if we look at red lentils in Canada, 80% usually in the top 2 grades, 20% in the bottom 2 grades. We were the exact opposite, where we had 20% in the top 2 grades, 80% in the bottom. The problem with that, of course, is the scenario was that we had to chew through about 1 million tons of production. And so, when you look at that, the drag on the global industry to take the inconsistent quality has been really felt across all origins. Now, I think, a view of many of the panelists, you'll get their views as well. We've gotten through that situation where the number 3 stocks in Canada are, basically depleted. The new crop quality was good, and we're now in a position where we have current supplies at quite significant levels in all jurisdictions, but we're upon a new crop. So I think we're going to focus there first. I'm going to start, if we look at, let's go, according to origins that are coming into the market. I think we'll start there. So we'll start with Suleiman looking at Turkey as the June harvest, then we'll go to Quentin, and then we'll go on to Australia, and then we're going to ask Mehmet to give us a bit of a perspective on the consumption markets in the Indian subcontinent.
When you look at Turkish production, I just want to give some update for Turkish production and some carryover and consumption, and then the market stability and price, and also if there is any new things coming in our region. Last year, the Turkish production was about 450 to 500,000 metric tons. The yield, because of the yield, was very good. But this year, because of the higher wheat prices and higher corn prices, Turkish production the plantation came down 15 to 20% less than last year. But vegetation is good, so our expectation is about 350 to 400,000 metric tons. Although the yield expectation is slightly better than last year. When you look to carryover in the market, there is not much Turkish crop carryover, but in our market there's about 50 to 70,000 tons Canadian market carryover to the stocks available at the moment, which makes market very stable. Usually, just before the Ramadan, there is the market being very volatile in Turkish market. So when you look to consumption, it's very traditional products. So the consumption is not changing very easily. So still Turkish consumption is about 300 to 350,000 metric tons on split basis. So which is making exactly the Turkish production is enough for Turkish consumption. All the products imports to Turkey for re-export, split in Turkey and for re-export purposes. Turkish traditional export is about 100 to 140,000 tons every year, depends on the price and competition. So the Turkish import is about 200,000 metric, 180 to 200,000 metric tons every year. So which shows exactly the imports from Canada and from Australia exactly going for regional demand. The price is very stable in Turkey. Last couple of months, especially last couple of months, because this is very much related with the products availability in the market. There's less Turkish products, but it's very upcoming. Crop is coming is about 20 to 30 days, and there's enough stock of Canadian products. In addition, there is a new development might happen, which is Syria devaluation might change the market dynamics a little bit, because the Syria produce is about 80 to 100,000 tons every year, and a Syrian pounds from 50 today is 100, and yesterday was about 70. So which makes Syrian products available to export, and there is currency deficit in Syria, which may trigger the price down a little bit. Also, another factor is that the currency shortage Egyptian buyers are reluctant to build up their stocks because of they are expecting also currency devaluation in their market. That's also affecting the demand and reducing their consumer stocks. But demand of international trade is being very limited in Egypt right now. That's why I'm sure the Egyptian friends knows very well. That's why the Egyptian market is dead today. I would say in our region there is a new developments. We are working since a couple of years of Russian lentils. We were working about Russian chickpeas together with our Russian friends Mahmoud, and then they became very successful, and they increased their production. Today, last couple of years, they start to plant red lentils too, and we expect it to 40 to 50,000 metric tons this year, and it could multiple very fast in near future. So the overall way I'm seeing the market is very stable. I do see if normal weather condition, I do see the market is going to be next couple of years is going to be stable. I would say the world should produce less red lentils to meet farmers' expectation, farmers' price expectation. Thank you, Murat.
Perfect. Quentin?
Thank you, Murat. I guess on the Canadian side, Statistics Canada will release their production estimates on Tuesday, so that will give the market a lot more chatter and substance for where we start off. But Ag Canada released their estimates about a week ago. They projected 2.22 million acres for all lentils. We believe that estimate is slightly on the high side. Most in the trade are projecting about 2 to 2.1 million acres, and of that, red lentils will be roughly 45%. So that would result in a production number of roughly 550 to potentially 600,000 tons of red lentils on the high side. In saying that, though, we do have a high carryout stock of red lentils as well. Depending on what we see for exports for the remainder of this year, we would likely see 350 to as much as 400,000 tons of red lentils carried over from this year's crop. As Murat mentioned, the quality of this is quite high. In fact, a large percentage would be number 1 grade in terms of color. In terms of the feed grade that was out there in the number 3s, the majority of that was either exported or consumed domestically. So as Murat mentioned, definitely quality a lot higher this year, which is why we've seen a lot of our end-use customers become much more comfortable, and we've seen the resumption of trade in the last few months. That reduction in production would be roughly 20% versus last year's acreage. In terms of what we're seeing from the government side, which I think is a very important factor as we get into new crop, is the fact that the Canadian Wheat Board has lost its monopoly, and that as of August 1st, producers and even the export companies in Canada will now be allowed to sell that wheat and durum and malt barley for export. So why that changes things as we go into new crop for commodities such as pulses is that the grower can now sell as much wheat, durum, and barley as they wish, and therefore they can bin their pulses and red lentils specifically. So although we do believe that there will be ample supply of red lentils, the grower may not feel the necessity to sell if prices do not generate a good cash flow.
Brett?
Yeah, look, on the Australian side, I'll sort of go back a step because we're a long way away from new crop. But last year, last harvest in November, December, Pulse Australia had numbers out there around that 251,000. Personally believe that's slightly on the low side. I think it's probably more likely our crop was around 275,000. We've had two rather large seasons for Australia. The season before was well over 300,000, so which brought us a carry in probably around that 65 to 75,000 tonnes. On that, we've had very strong exports though. We've been very competitive against our Canadian friends, and last year we exported for the season about 246,000 tonnes. If we can keep and maintain that sort of pace, the carry-out after this season will actually be well below 100,000 tonnes, which is manageable. And currently we've exported, according to ABS stats, about 90,000 tonnes up to the end of February. Going forward, tough one to predict, but farmers have been pretty disgruntled on lentils and lentil pricing, so I think it's going to be a similar story to what's happened in Canada. We're going to see acreages fall. They've been strongholders in Australia below certain levels. They just will not sell it. They have other options with higher prices in canola, and so I believe that our acreage will drop. Still too early to say exactly how much, because we've got a little while to go yet, but I think it will be down.
Mahmoud, from a consumption market perspective, if you could just give us some of your perspectives on the current status and where you see things going.
In fact, my friend Manjula had already disclosed everything, but those who were not in the panel, listening, so I could repeat it. Sri Lanka is, as I said, it's one of the largest importers of red lentils today, and probably we import about 100 to 110,000 tons of whole lentils. At a period of time, Sri Lanka was importing only split lentils from Turkey. Major supplier was Turkey, and since 7 to 8 years, there are splitting plants which have been erected, and today there are probably about 20-25 splitting plants all over the place. So 90% of the whole lentils is being imported from Canada and from Australia, and I could say market is stable, and every year and at any time we require lentils, as it is consumed three times a day. And secondly, all depends on the world market, all how it reacts, and the consumption also affects the market effectively. And I would say all depends on the Indian market also. If India starts buying, the market of lentils could go up. And at the moment it is stable. So we see the market going to be stable for a couple of months.
So we see stability in the market now. We mentioned India. I'd just like to maybe get a few perspectives from our panelists on the dynamics that India. We've talked about the Turkish dynamics, the dynamics that the Indian situation may play. Let's start again in the same order. Suleiman, any perspectives on how India will play into the market coming?
I don't have the information as much as I do have for my
Your perspective.
Our region. But as far as we've seen that Indian market is short this year, that normally the demand should be up to 400 to 500,000 metric tons for Indian market. But the low pigeon peas price is is pressuring the red lentils increase and green lentils increase in India too. So I think from the historical point that India is not the very traditional and regular red lentils buyer. I mean, until 2008, India was buying about 150 to 200,000 tons in the market every year. And in 2008, of course, the demand increased a lot. But we got some kind of illusion that lentils producers and traders, we fall in the illusion that India will buy every year for 400 to 500,000 tons, and we produce. We lead the farmers to produce more to meet Indian demands. But we have seen that in 2010 and 11, the Indian demand was not as big as expected, as usually 200 to 300,000 tons. So I think this year this season they will end up also to consume 200 to 300,000 metric tons, and then prices will not go as high as they expected. I think the today market levels will continue.
Quentin, you guys are active there. Any perspectives?
Sure. I mean, obviously our Indian counterparts can add a little bit more flavor to this and be more specific, but the information that we have is that Indian acreage was down roughly 25 to 35% versus last year, so obviously a decrease in local supply there. And correspondingly, we've seen in the last probably 6 to 8 weeks a dramatic increase in interest from India as well as Pakistan for Canadian origin product, which would kind of lend to that theory that more product is needed there. To Suleiman's point, I think in the past when we've seen big years where India was a major player in terms of volume, it was a lot of position taking and trading, and where I think that there's a difference now is with the global credit crisis and tight money supply, and even more so the devaluation of the Indian currency recently. It makes it a lot more difficult and a lot more risky for these companies to be able to take those positions, because it's no longer the 10 or 15 or $20 a ton they're trying to make on the commodity. They have that much exposure, if not more, on currency alone. So I think although there will be lots of interest into India in the near term, and as we get into new crop for both Canadian and likely Australian origin product as well, that will be capped because those people just can't get the access to credit or just view it as too risky.
Anything to add, Brad? Anything?
No, I think everything's sort of been said, but yeah, we've seen from Australian point of view as well more demand coming from India. Totally agree with Quentin's remarks there that I think this is consumptive demand. You hear reports of the crop being short over 40%, but it could be anywhere between 300 and 400,000 tonnes short. If that's the case, I think the supply and demand on the lentil balance sheet for reds in particular will start to turn the other way.
We mentioned earlier the relative prices of cereals and oilseeds, and the dynamic of the farmer and how the farmer plays into the price prospects and the trend that we'll see over the coming season. I think that from our perspective, the farmer is much more informed in every region of the world, and with not only information available, but accumulators and stock position takers in origination markets, there's a dynamic that wasn't there a decade ago. So, Suleiman, in Turkey, the dynamic of production is one thing, but the dynamic of accumulation and product coming to market can be disconnected on timing. Any perspectives on that?
Turkey is a very traditional red lentil producer. The dynamic of the farmers, I just have to explain that we don't have alternative rotational crop. And the lentil producing in the region, southeastern part of Turkey, there is no alternative rotation crop there. So farmers has to grow around 400,000 tons every year because they put less input for lentils, and it has been last couple of thousand years that the production was there. Regarding the accumulation of stocks, of course, when Canadian products introduced in Turkish market, the game plan changed, and the speculation also being changed. That there is not much speculation to be allowed there because of the alternative origin of Canadian products is always there. Now, starting with bulk program, some companies, it's also it's not allowing them to bring container by containers. It's 20 to 30,000 tons stocks. Maybe each company is always there, and then visibility is always there. How much the stock is coming, how much stock is reducing, and then statistics and numbers is always there. So, therefore, one leg of speculation is gone because the Middle East is very transparent at the moment because of one of the reasons that stock accumulation is very transparent.
Quentin and Brett, in Canada and Australia, farmers, have done very well on their cereals and oilseeds, and I think we're seeing a dynamic around the world that as we look at each origin coming into the market, we're seeing the effect on acreage of higher cereal and oilseed prices with a reduction in Canadian acreage. Once again, let's think of the magnitude of the Canadian reduction. 3.5 million acres in 2010, down to 2.6 million acres in 2011, down to 2 to 2.1 million acres, and the reduction almost entirely in red. So if we look at the reduction of red lentil acreage, we're talking about nearly 1 million acres less red lentil production in Canada alone. Now the dynamic of the Canadian Wheat Board and the dynamic of the cereal and oilseed prices in Australia, it's very obvious to me what we're going to see. The farmers don't have the need to sell. Any comments or?
Yeah, look, it's new crop canola pricing at the moment to the grower is around $575 delivered port, which was very similar to last year. Growers went to canola in a big way, and they'll trend to do that again. The lentil price this year has been extremely low, and they have shown the signal that they will not sell below a certain level, which has been around that $400 delivered port. So I suspect we're going to see that trend continue. They're happy to hold it and hold it as long as they need to. They've had a reasonable season, so cash flows from a grower's perspective is good. So they have the financial grunt, so to speak, to hold. So I suspect that's what we're going to continue to see unless there is a rally in pricing.
Quentin?
I would just add the fact that even just for our company specifically, we've seen record bin sales over the last couple of years. So the average Canadian producer can bin 1 to 1.5 years crop production. Some can do even more than that. So the necessity to sell in terms of space certainly isn't there. In terms of cash returns, I think farmers in Australia and Canada, like you mentioned, are very happy buying more land. Farms are growing, so they're becoming stronger financially. That helps as well. And I think in terms of the canola aspect that you mentioned before, I remember when I came in the industry, they were looking to try and get 10 million acres of canola, and they thought that was impossible fact. Yeah. This year we're going to be roughly 21 to as high as 23 million acres is the highest estimate. So you can tell how fond producers are of growing canola and the returns that they've received over the last few years. And I think another factor with canola specifically is on every given day there's a buyer, and the price more often than not is quite attractive. Whereas unfortunately for products like lentils, it seems to be more feast or famine, so they can't necessarily sell it even if they want to. So that makes a big difference in terms of their marketing decisions as well.
Perfect.